Shares of CSX moving higher this morning after reporting results. Brennan talked with the CEO, Jim Foote, joins us with more on a pretty good day for the transports. Hey, Morgan.
Hey, Carl, that's right. Now, how do I follow up that segment? I mean, really, CNBC turning 30. All right, well, if you take a look at shares of CSX, they are higher right now. They're leading the transports higher, and what's largely a flat market. Transports are up nearly 1% right now. I did speak with CEO and President Jim Foote. He said very good quarter based upon solid execution, that the railroad's running well in difficult circumstances. Keep in mind, we saw a lot of really tough weather last quarter. CSX, like the other freight carriers, was impacted to a certain extent by that. Like we've heard from Jamie Dimon and Warren Buffett, Foote telling me the U.S. economy may be a little slower than a year ago, but that he still sees it on very solid footing, and that just about every category for the railroad had growth during the quarter. That's really notable, guys, given the fact that railroads like CSX touch just about every good to some extent that's moving around the U.S. Something that drove the better than expected results that we got from CSX, export coal. It was a driving force again. We saw tailwinds last year that helped again in the first quarter. CSX reiterated its full-year guidance. A key part of that is because Foote does expect to see some softening of those coal volumes in the second half of the year. Also really noteworthy, CSX, like some of the other railroads we're hearing from, including Kansas City Southern this morning, has seen some increases in crude by rail again. A lot of discussion of further growth, according to Foote, and that the economics in terms of the spread between WTI domestic crude and offshore Brent remains favorable in terms of some of those crude by rail volumes. So something to watch there. CSX also picking up more customers in a shift from truck to rail more broadly. For that reason, Foote doesn't believe that pricing has peaked yet. Keep in mind, CSX has raised prices in recent quarters. That moving merchandise by truck, he said, is 15 to 20% pricier than rail, and that shippers have been paying a premium for the reliability. So better service at CSX as it continues to implement precision-guided railroading is making it more competitive. Perhaps also part of the reason we're seeing other U.S. rail carriers implement similar strategies right now. Not surprised, he said, by some of the softer trucking data that we've seen in recent months, including J.B. Hunt's earnings. They said given the weather impact, also the pull forward last year ahead of anticipated tariff increases on those U.S. exports to China that never actually materialized. But in terms of trade in general, also keeping an eye on the freight flows between the U.S. and Mexico. There have been a lot of reports, guys, of backlogs after that border closure threat a couple weeks ago. CSX has not been impacted by that, but he's keeping an eye on it, says it does create uncertainty. So, again, shares of CSX are up 5% right now on those better than expected results.
Quick question, Morgan. Does it raise a question about how the transports broadly are set up for earnings period? They haven't been doing that well in the market. And, you know, you've had this idea that maybe analysts and economists and everyone got too pessimistic about growth prospects. So I wonder how the rest of them are going to trade and do.
Yeah, it's a key question. I think the rails in general have been holding up more solidly relative to other areas of transports that are, or transport specifically focused on freight over the recent months and recent years. And I do think a large part of that is what Foote was talking about in his call with me, that shift from trucking to railroad, where it makes economic sense for the shippers that are moving goods around the U.S. Trucking rates, the spot rates, were bananas last year. We saw record numbers, and so I think you are seeing some shift in that. But in general, based on the conversation I had with him and other folks that watch this area, it does seem like from that vantage point, economic growth will continue, though maybe not at the same type of pace we've seen in the past year or so.
Fascinating. A lot of information in there. Morgan, thanks so much.